Hey everybody, Rob Maurer here, and today we're going to be talking about a new supercharger construction method that Tesla has employed. Looks like it might be a big boost to supercharger network expansion. We also have news on the federal EV tax credit, Morgan Stanley chiming in on that as well. Then we've got some discussion on the Model 3 margins in Shanghai that has surfaced today for some reason, news on the Model S and X, and a couple other stories as well. Tesla stock on the day today dropping back nearly to the levels that we had seen pre-delivery and production report announcement, down 3% to $670.97. Tesla closed at about $660 on the Thursday before the announcement. So despite that beat, Tesla now just sitting up about 1.5% since deliveries were reported. As for the macro performance today, the Nasdaq was pretty close to flat, down less than 0.1%. Alright, I'd like to begin today, again discussing supercharging. I think we have some pretty important news here. This was shared on Reddit by a couple of users, Ebgerday and Cam the Hombre, who spotted Tesla installing a supercharger station in Utah. But instead of the normal installation process, this was a prefab or prefabricated construction from Tesla. Cam the Hombre writes, quote, "The Tesla employee said he has been doing supercharger installs for a while in California. This was the first prefabricated one with the stalls ready to go on a concrete slab. It looks a lot like the temp stations that sit on semis during busy times. He said it helped the install go much quicker and smoother. Semi arrived yesterday around noon, and they are finishing up wiring tonight. This location will also have megapacks, and the expansion is going to be 24 version 3 stalls, but they are lighting up the first 8 before the remaining 16. I'm not sure if that's new or just due to spring break. According to the installer, this is a new process that Tesla will be using to speed up installs in the future." End quote. So throw this on the pile of news that we've had on the supercharger network lately. Remember yesterday we talked about Tesla utilizing variable pricing to optimize capacity. In Q4, we saw Tesla expand the supercharger network more in that single quarter than they had the entire year to date prior to that. This quarter, we saw Tesla start production in their dedicated supercharger factory in Shanghai, and now we're seeing them use a prefabrication strategy to speed up the installation process, which according to this employee, seems to be effective. All of this is pointing to a much faster growth rate for the supercharger network than what we have seen historically. Historically, the growth there has been a little bit linear. Of course, charge rates have improved too, so throughput has increased a little bit beyond that. But just in terms of actual charging stations, it looks like Tesla here is really ready and has already started to ramp this up aggressively, which would make sense for Tesla to do kind of regardless because the fleet is growing rapidly. But this also coincides with the company call leak detail rumor that we have heard that Tesla intends to open up the supercharger network to other EVs through an adapter and an app. You start to line these things up one by one, and that looks even more credible. So anyway, interesting to see this prefab strategy, interesting to see that they are planning to put megapacks at this station. Not a new concept there. Tesla has obviously done that in the past with power packs. It's just been limited as Tesla has these battery constraints. So hopefully we'll see more of that, but it may still be some time before some of those constraints are more alleviated. All right, next up here, we've got a little bit more information on the potential US federal EV tax credit, which I may have to stop calling a tax credit because it may not end up in that form, but this comes from Reuters today. They say that, quote, "The Biden administration's $174 billion proposal to boost electric vehicles calls for $100 billion in new consumer rebates and $15 billion to build 500,000 new electric vehicle charging stations, according to a Transportation Department email sent to congressional staff and seen by Reuters." End quote. So of that $174 billion, the $100 billion to consumer rebates is not quite the $135 billion that we had seen speculated on yesterday. But if this does end up being a $10,000 credit or rebate, that would still be enough for 10 million vehicles. The rest of that breakdown then of the $174 billion, Reuters says is $15 billion for charging stations, $20 billion for electric school buses, $25 billion for zero emissions transit vehicles, and a mysterious $14 billion in other tax incentives. We'll await more specifics, but nice to have a little bit more of a sense of how that may be broken down. And of course, if the supercharger network does open up, maybe Tesla could be eligible for some of that $15 billion for charging stations. Prior to that news today, Morgan Stanley last night did release a note talking about the tax credit and how that might be advantageous for Tesla. They asked the question of, quote, "Could the proposed $174 billion EV infrastructure package exacerbate Tesla's disproportionate advantage over the rest of the legacy players and new entrants collectively? In some scenarios, we believe this may be possible. Within a range of potential outcomes, we believe investors may need to prepare for an EV infrastructure bill, including purchase incentives for EVs, development of charging and manufacturing infrastructure, grid enhancement, etc., that could disproportionately benefit Tesla and pure BEV startups near term while providing for a relevant, if not thriving, terminal value for non-Tesla players long term." End quote. So I'm not really sure exactly what they mean by that last part of that, the terminal value long term for other players, but basically, they talked about things that we've talked about. Obviously, an EV credit helps Tesla because they don't produce ICE cars, so they don't have that impact of people switching to EVs from ICE because of the credit. And Tesla is positioned to take better advantage because they have a higher volume production rate on EVs than other makers. The real headline, though, from this Morgan Stanley note is, quote, "Put it all together and we believe auto investors face greater risk not owning Tesla shares in their portfolio than owning Tesla shares in their portfolio," end quote. I would definitely agree with that. All right, next here I want to talk a little bit about Model 3 margin out of Shanghai. For some reason on Reddit and Twitter today this has come up. There's been this table that was published back in February, so not exactly sure why it resurfaced today. But it's a table breaking down the costs of the Model 3 in the US versus the Model 3 in Shanghai, and all of these are just estimates, but it has the estimated gross margin in Shanghai at a whopping 55%. Obviously, if that were accurate, that would be incredible, but it's not. The first problem here is that the cost of goods sold in this estimate, they put at $24,000 versus the average selling price of about $44,000. So just quick mental math there. You can see that the margin on that is not higher than 50%. So they actually flipped this. I don't know if that is the person that created the table or the estimate itself, but per the numbers there, their cost of goods sold are 55% of revenue. So their margin on that is 45%, not 55%. But either way, these numbers are unrealistic because this would mean that Fremont's margin on the Model 3 is inexplicably low. Each quarter for my earnings estimates, I go through and I estimate gross margin for all the product lines at each factory. If I go back and I put in a 55% gross margin on the Model 3 in Shanghai, I then have to lower my Fremont Model 3 margin to -3% to end up at the same total profit, which is what Tesla actually reports. Even if it was just 45% like what they're actually saying here, then my Fremont margin on Model 3 goes down to 6%. Aside from being obviously unrealistic, we already know that's not accurate because Tesla has reported plenty of earnings prior to Shanghai ramping up that show that the Model 3 gross margin would have to be higher than that. Furthermore, the lower you put the margin on the Model 3 in Fremont, the less a higher margin out of Shanghai makes sense. It just creates a bigger and bigger spread that just becomes nonsensical. If they were basically selling Fremont production at cost, why would we think they'd suddenly just have 45% gross margins, which is insanely high in Shanghai? It just very clearly doesn't add up. And again, I'm not sure why this got surfaced today, but there was a lot of commentary around it, so I wanted to at least address it. All right, next up here, we do have a small update on order timelines for the Model S and Model X refresh vehicles. Electrek is reporting that a number of readers have reached out to them that had March and April delivery estimates, but that those have now been pushed to what Electrek says here is a May to July timeframe. I think that may be a mistake on the July part. That would be into Q3, so instead maybe it's May-June. But if you are saying May to July or July at all, please let us know in the comments. But other than that, not too surprising to see a delay here, though perhaps disappointing that that delay does not also encompass April. It doesn't sound like this is every order though, so I'm guessing some of them still have March-April estimates, which April could still be met. I've seen some speculation online that this may be related to the version 11 software. I think that's probably not the case. I think if that were the case, Tesla would probably be still producing and stockpiling these vehicles, and we would have seen more of them on the drone shots or visible in the parking lot, things like that. Tesla's got plenty of capital now that they could afford to sit on inventory like that, and each week that they don't produce these would be more than $100 million of lost revenue. So as much as I wish it were software, I think the delays are much more likely to be production related. Unfortunately, maybe we'll hear a little bit more from that on Tesla's Q1 call, but hopefully whatever it is gets resolved soon. Oh, and when you know it, as I am recording this, somebody just posted on Reddit saying that their Indianapolis sales rep told them today that they have had customers that have had VINs assigned for their new Model S's. So that's an encouraging sign. If you are in that circumstance where you have a VIN, please let me know, or if you've heard of anyone getting one. This person is saying, I'm assuming communicated by the sales rep, that the expected delivery on new VIN orders is 3 weeks. So I guess that would basically be the end of April. All right, next here, just a quick update on the master of coin of Tesla. Of course, CFO Zach Kirkhorn. Sounds like he is moving to Texas per a Bloomberg report, or at least has acquired some property there in the Austin area. So more signs that potentially Tesla at some point may be moving their headquarters there, if not officially, at least on a sort of de facto basis. The article does not specify whether or not Kirkhorn is keeping any property in California. All right, next up here, we've got an update from Sandy Munro. They have acquired an ID.4, so Munro today published his first impressions of the vehicle. It'll be really interesting to follow that over the coming days and weeks, as I presume they'll probably be doing a teardown of it. So this is really, truly first impressions just based on walking around the vehicle, sitting in it for a couple minutes. But Munro said, quote, "This is a quality build, there's no question about that," end quote. Said that the gaps look quite good. He didn't measure them. There was one big one that they pointed out in the door panel, but other than that, he thought it was really good. He did sit in the car for a couple minutes, and his first thought there was that it's kind of a car that would allow people to, quote, ease their way into the EV world, end quote. So that kind of calls to mind the common refrain of Tesla bulls that these other EVs are really great to introduce people to electric vehicles and kind of act as a gateway drug to then eventually purchasing a Tesla. After playing around with the user interface a little bit, Munro said that it would have been more intuitive to him before driving a Tesla, and that, quote, now it seems kind of awkward, end quote. Similar sentiment on the seats. He said, quote, these are relatively comfortable seats. It's going to be a while before anyone talks me out of the Tesla seats, but these are pretty nice, end quote. And then kind of humorously, after checking out the rear seats, Munro got stuck in the back with the child lock. He was not happy about that. I also had to kind of laugh, as did Munro a little bit, that there is a stop-start engine button on the ID.4, which obviously does not have an engine. Munro was pretty miffed at that, understandably, because that's adding cost to put that button there with no purpose, and also, why is it there? That's just confusing. He speculated that maybe it's there just to help people acclimate to an EV, but at least put motor or something if you're going to do that. Probably some cost efficiencies there from using that same button, but still, funny to see that in an EV, and you couldn't ask for better symbolism than that. Despite their whole Volkswagen aspirations, VW there showing very clearly where their roots lie. Alright, last couple of things for today. First, a quick follow-up on yesterday's video. I may have been unclear somewhere, but we got a lot of comments saying that, yes, Tesla may be using front casting and rear casting, so cut it in half. I did explicitly talk about that, but in case that wasn't clear, yes, that could reduce the production capacity that Tesla is able to achieve from these alleged 9 Giga Press orders. We know that Tesla eventually has plans to do front and rear casting, but I do think it's a question of timing and implementation. I wouldn't be shocked if all of these were just rear casting machines, and front casting comes later, or front casting ends up being 2 pieces like we had seen originally with the rear casting. Obviously not forever, but maybe for some period of time. I do think that's less likely though. I think these are probably front casting and rear casting, so maybe it adds, 650,000 capacity across the 9 machines. I'd mentioned yesterday that maybe that's actually even 400,000 or so if there's going to be a cast piece for the structural battery. I had taken this from the Idra video, but after a few comments and watching that video back, it's a little bit less clear. So what they said was, quote, Giga Presses can dramatically change how the underbody structure of cars and trucks can be made. This new machine offers revolutionary advantages. The lower underbody of the car can now be made in 3 only modules, 1 front casting, the battery case in the middle, and 1 back casting, end quote. So initially I took that to mean 3 cast pieces, but that may have just been a misinterpretation. Looking back now, that is not explicitly stated. A couple people in the comments yesterday made pretty good cases that stamping would be easier for the structural battery. I'll need to do a little bit more research before I'm fully convinced on that, but definitely not as clear that that would be casting potentially as what I thought yesterday. So just wanted to clear that up. And then the second thing about the potential delivery of the 8,000 ton casting machine to Giga Texas from the drone flyer video that we talked about, I made a mistake on the timestamps for what we were trying to show there, so my mistake on that part. Apologies for that confusion, but we did also hear from Joe Tegmeyer in the comments. Joe also does flyovers there at Giga Texas. He said that the large pieces of equipment that we thought might be that 8,000 ton casting machine are actually an aluminum furnace and related parts. So not the casting machine itself, but machines that are used to melt the aluminum for casting machines. Lastly then, just a quick update on SpaceX. SpaceX, as planned today, launched, landed, and successfully deployed 60 more Starlink satellites, completing already their 10th mission of the year. So congrats to SpaceX, and that is where we'll leave it for today. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and I'll see you tomorrow for the Thursday, April 8th episode of Tesla Daily. Thank you.